What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. A lot of you guys want me to do a video on AT&T stock, so I'm going to do a stock analysis and dividend analysis. I'm going to compare the stock against the S&P. I'm going to show you how it's doing versus its rivals, and it did fall off the Dividend Aristocrat list, so that's one thing that I will discuss. Is it a buy? And again, this is not financial advice for entertainment purposes only. Disclaimer in the description. Make sure you smash that like button. Let's check this out right now. So AT&T stock is sitting at $26.34. Previous close was $26.46. Its day range is $26.14 to $26.73. Year range is $22.02 to $33.88. The market cap is $188.95 billion US dollars. Volume is 66.29 million. Its PE ratio is, whoa, this is according to Google Finance, 222 to 0.20. Has a dividend yield of 7.90%. Now, that is a high dividend yield. And these guys have a reputation of being a dividend aristocrat in the past, but they did have some issues with stopping their dividend hikes, which is a red flag. So these guys are not doing too hot against the S&P. When I like traditional or Roth IRA stocks, which I will reveal to you guys shortly on my M1 Finance fractional share Roth IRA, I like raises. I like increasing dividends. I want to see a increase in price per share. I want to see an increase in the dividend. So if I'm not seeing that, that's a turnoff. Does not appear to be traditional or Roth IRA material. And AT&T versus its rival Verizon, which I'll show you in a second, they are losing to Verizon. So Verizon's another one. Verizon hasn't done the best against the S&P, but they have a few things that make them very competitive versus AT&T. So the price per share is a little bit better with Verizon, and it's a little bit more expensive, obviously. And Verizon is a high yield dividend stock. But there's a few things I want to go over with AT&T before we start jumping into money and dividend, doing a dividend stock analysis. So let's check that out. So AT&T and Discovery, they made an announcement and definitive agreement to combine Warner Media's premium entertainment, sports, and news assets with Discovery's leading non-fiction and international entertainment and sports businesses to create a premier standalone global entertainment company. So this is the very interesting thing with what they plan on doing. So the companies expect the transaction will create a substantial value for AT&T Discovery shareholders by bringing together the strongest leadership teams, content creators, and high-quality series, film libraries, in the media business, accelerating both companies' plans and leading to direct-to-consumer streaming services and global consumers, uniting complementary and diverse content strengths with broad appeal. Warner Media's robust studios and portfolio of iconic scripted entertainment, animation, news, and sports, with Discovery's global leadership in unscripted and international entertainment and sports, forming a new company that will have significant scale and investment resources, with projected 2023 revenue of approximately $52 billion and the EBITDA of approximately $14 billion, and industry-leading free cash flow conversion rate of approximately 60%. Creating at least $3 billion of expected cost synergies annually for the new company to increase its investment in content and digital innovation and to scale its global DTC business. So this is one thing, but let's look at AT&T as an individual company and see how they're doing revenue-wise. There's a few things that they have issues with. One is debt, but the revenue has done decent. Okay, this is in millions US dollars: 132, 146, 163, 160, 170, 181, and then it went down to 171. That's kind of a given because of the pandemic. But I'm going to go over their dividend history. This is the thing that we like is dividend investors. How are the dividends doing? Let's just start in 2013. 45 cents, 46, 47, 48, 49, 50, 51, 52. It stopped. So they were one of the dividend aristocrats. They have a high PE ratio, an annual dividend of 2.08, and a dividend yield of 7.91%. I'm still careful with this one. I'm still not afraid of pulling the trigger and just selling these guys. I sold these guys and threw them in Verizon. Now I'm rebuying them. I'm not afraid to just sell these guys because I'm turned off and I don't like the way they are doing. And there could be a dividend cut in the future. I don't know. There's a lot of uncertainty with these guys, and I'm not afraid to pull the trigger and just get rid of these guys completely because I like Verizon better as a dividend stock. And I'll go over Verizon's revenue and their dividend trends. Here's the thing with Verizon. This is in millions of US dollars. 127, 131, 125, 126, 130, 131, 128. So they're still a little stagnant, but the stability wise, they're a little bit more stable than AT&T, and their dividends are trending upwards and they're not stopping like AT&T, which I'll reveal to you. So here we go. Here's 2013, 51 cents, 53, 55, 56, 57, 59, 60, 61, 62, 64 cents. Has a dividend yield of 4.72%, sitting at 53.59. The dividend is a little bit more stable compared to AT&T. It has an annual dividend of 256 and a PE ratio of 10.05. That's the thing. They're continuing to increase their dividend, and they're a little bit more stable versus AT&T. So I like Verizon better than AT&T. I was all about AT&T, but they made some changes which really surprised shareholders, and the CEO was pretty much promising that they would do this, and they totally flip-flop. So I like Verizon better. I'm not afraid to pull the trigger and get rid of AT&T. So let me know what you think of this video. Do you like AT&T better or Verizon? So if you're new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Tomorrow I will post a video on some hot dividend stocks to buy. I just want to do a quick run before my shift starts. And you guys take care and have a good one.